It's a Wile E. Coyote moment for everybody, where you're off the end of the cliff and there's nothing beneath you. Basically, anything is up for grabs, much like it was after the 1930s when all of these institutions were built, and after World War II too. Anything can happen right now. And this is fascinating. You know, this whole central bank digital currency thing, that's going to lead us into a whole new world. But there's a once in a lifetime, not even a lifetime, a once in a century opportunity to change the construct of the system. It depends what you're in this game for. I'm not in this game for money. Money is a lifestyle token. And for me, what I care about is my quality of life. And again, I'm not talking about I need to have a jet or whatever. It's about a quality of life. You know, can I live in a beautiful house? Can I afford to eat at a nice restaurant? Can I do certain things? Because you've only got one life, and if it's not all about making money. It's about having the best quality of life that you can possibly achieve for yourself and your family. We talk about this three-phase that happens over these kind of crises. One was that liquidation phase. That happened. That finished in the end of March. Then we had what I called the hope phase. And the hope phase was when everybody thought it was going to be okay. And we saw that there was a big lift in asset prices. Everyone thought it was okay. And then I said it's going to transition to the insolvency phase. And that's where we start to see the drag on GDP growth going forwards. And that in itself would start to see people get laid off again, the stimuluses disappear, small businesses go under, and that process unfolding. Now, what surprised me is the hope phase in markets never went away. Yes, the bond markets were different and the banks traded differently. So we saw this bifurcation, people call it the K-shape. But really, the markets kept hope, while the underlying economy, you know, whether it's Europe or whether it's the US, has kind of slowed down again. So we're still seeing, exactly as my thesis, year-on-year GDP growth like -5%, -4%. Everyone focuses on that Q-on-Q number of, hey, GDP's up 34%. No, everybody's having a really shit time of it. And, you know, the dichotomy between Wall Street and the average guy is something I've never seen in my life before. I mean, it's simply staggering. So I think we've got a pretty ugly patch coming up. Who knows what the markets do? The markets want to look through it. But the outcome of all of this, and crucially to the conversation we're going to have, is, okay, we missed an entire stimulus in the US, which was the one from September, never got done. And a bunch of stuff's about to roll off in December as well. So it's a Wile E. Coyote moment for everybody, where you're off the end of the cliff and there's nothing beneath you. So you've got the central banks trying to support this whole situation because fiscal stimulus is not happening. And the problem is the monetary mechanism doesn't work. So velocity of money, every single major country in the world outside of the US is now below 1. And the US is 1.2 or somewhere. So basically money from central banks doesn't go through the banking system and into the economy and works. So that's kind of what I think is coming. Obviously through the back of that, we then get the recovery. I mean, it's a standard recession. At some point, things look good again, and then we look for the macro trends that emerge from that. But then the big one is coming, and that's the death of the currency market. That's something that I've been talking about. If that goes, then macro is finished. Because currency, like bonds, is enormous, super liquid. You know, trades for 3 or 4 trillion a day, so it dwarfs anything else. Now, what we've heard from the IMF, the BIS, the Bank of Japan, the Bank of England, the ECB, the Fed, People's Bank of China, and everybody is this move to digital currency. But what's been clear is the IMF are pushing for an agenda which is the new Bretton Woods. And Bretton Woods was an agreement amongst nations basically to peg all their currencies to gold. And then famously Nixon came off the gold standard eventually. But that was a post-World War II construct that allowed all nations to kind of not compete with each other on interest rates, to build a platform of which, once they built Bretton Woods, they built everything from United Nations to the World Bank to the IMF and all of these institutions that we know. So if the IMF are saying this, what are they saying? So I've gone through their speeches and they're basically saying, okay, we're in an extraordinary situation right now. Countries need to print money to fiscally stimulate, as we talked about earlier. But it's kind of difficult to do it. And if you fiscally stimulate to the amount that you actually need to, let's say, do proper stimulus, not just giving a check, but creating jobs by creating industries and all of those things that need to happen, Well, that's like 20 or 30 or 40% of GDP they need to do. How do you do that without devaluing your currency? And the answer from the IMF is do it all together. If you do it together, then what are you devaluing against? Well, hard assets, Bitcoin, gold, stuff like that. But you're not devaluing each other. You're not winning terms of trade. This is the idea that Facebook Libra had, which is create a basket of currencies where the dollar is one of the currencies. It's not the denominator. So if you think of everything else, it's like euro against dollars, yen against dollars. What they're talking about is having the dollar in the basket. If you do that, then the denominator is money supply. Basically, anything is up for grabs, much like it was after the 1930s when all of these institutions were built, and after World War II too. Anything can happen right now. And this is fascinating. You know, this whole central bank digital currency thing, that's going to lead us into a whole new world. But there's a once in a lifetime, not even a lifetime, a once in a century opportunity to change the construct of the system. We're macro guys, and I say this a lot, and people don't really understand, we live in the future. It's that moment when you have the light bulb moment is, you know, fuck it. There's a time to stand up and be counted. This is your opportunity. Now, could I be wrong? Of course. But this looked to me like the best single macro opportunity I'd seen in my entire life. And, you know, I've seen a few good ones. You know, I had a great one with the bond trade, you know, last year and early into this year and stuff like that. But this is better than that. This is a once in a lifetime bet. There's a hunch that from all of my conversations around this whole space, that there is a massive amount of human intellectual capital working in that particular space, because there's the flexibility of how Ethereum is based. And there's a load of flaws, like there's flaws about everything. So, you know, I'm not saying it's a perfect world. I also don't think of Bitcoin and Ethereum as the same thing. I think there's a chance that Ethereum can have a larger market cap than Bitcoin. And that doesn't make it a better currency or a better investment. It's because by the nature of a platform versus an asset. But I don't have enough conviction to make that my large bet. My large bet is Bitcoin because I have full conviction. Why is it so tribal? It's actually a throwback to 2016, when there was a lot of these projects rising. Nobody knew who was going to win. Everyone put their money in them, and you want your own to win, right? And that war is still being fought, and it's a false narrative now. Because Bitcoin's dominance as what it is now established. It's clear, it's institutionalized, that's over. And I look at this whole space and I see it's a very narrative-driven space. It's all behavioral driven. So use that behavior to your advantage, because within that is something interesting. I'm also intellectually interested in the future, because that's what I do. And if somebody tells me not to look at Ripple, I will go and look at Ripple, because you'll not tell me what to do. That's what we do in financial markets. We have to remain open. You know, you can't trade financial markets and go, well, I'm only going to trade Apple, and every other company's a fraud. They're not as good because their phones aren't as good. I mean, that's ridiculous. All of those are signals. The actual things is all of us are uneasy. We've been uneasy since the financial crisis, and probably since 2000. Anybody involved in financial markets has had a sense of unease. We've also had a sense of optimism about technology. And here are those things meeting. Here's the technological solution to the unease that we've been feeling. We've seen the fintech layer being built. We've seen the banks kind of going, okay, this is going to happen. What do we have to do? We've seen capital coming into the space to allow these people to build stuff. We've seen various different platforms and different solutions to different problems, and solutions to problems that aren't problems either. So we've seen that. Okay, so that's great. That's where we are now. So what's the next big catalyst? Next big catalyst in price is institutions, but they're not what's driving this space. The next part, because it's the disruption of money that's going on. The next part is what the central banks are screaming at everybody, is they are going to change money. And my belief in that is they are going to change money, not only just in the basket that we talked about, or some way, shape or form, but they're also going to change monetary and fiscal policy forever. They're going to blend. So central banks will be able to do direct stimulus. So that means they can penalize you with negative 1% interest rates because you're a saver, and give a student positive interest rates, or they could do anything they want within programmable money. That the central banks are going to go down two different paths. Some will just have a digital currency, which is just digital fiat, but it allows much easier transfer, and others will do programmable smart money. So let's say I wanted to solve the problems that we've got now. This is genius. This is literally genius, because if you have big data sets and behavioral economics, you can do some really, really powerful things. Now, the flip side is it's terrifying because it can be used nefariously, and governments are governments and they will edge towards that. We get that, right? I'm not saying that it's good, but it is also extremely good. If we had this in place through this crisis we just had, or the last crisis, we would have solved it so much faster. What interests me, again, it matters not what my opinion is. It's, is it going to happen? And what do we do? And again, people just get angry about it. I'm like, you can get angry all you want. If it rains tomorrow, you can get angry about it, but it's raining. Whether you like it or not, deal with what is. This is coming in one way, shape, or form. People just don't understand the amount of tokenization that's about to happen. This is a fourth turning moment. I think the entire financial structure of the world is in flux. And if this moment gets seized upon properly, everything will change.